Good afternoon. My name's Cal Everett. I'm the president and CEO of Liberty Gold, and Liberty Gold is focused on advancing three major projects in the Great Basin area of the United States for Carlin-style gold systems. Not advancing? That's what I'm pressing. I will be making forward-looking statements, standard cautionary disclosure. And this is effectively what Liberty Gold is. The company is the stock dividend off the takeover of Frontier Gold that was purchased by Newmont for $2.3 billion US in 2011. A second company in our group, True Gold, was taken over by Endeavour Mining in 2016 for 240 million Canadian. And we follow the exact same agenda in everything that we're working on. But these are past laurels, so when you're looking at a presentation today, just focused on what's in the company that comes next, because this is history, and somebody else has benefited from that success. We have the same geological group that's together. We specialize in Carlin-style gold systems. We're well-financed, and our projects in order of priority are Goldstrike in Utah, in Black Pine in Idaho, and Kinsley in Nevada. One of the key points to what we focus on is huge databases, because we're data miners, and every single one of these past producing run-of-mine heap leach gold mines were all mined above the water table, which is key in our selection process. I'm just going to spend a minute talking about the case for peak gold, because I absolutely do not believe in the term peak gold, which is actually being used quite frequently by major mining companies today. So these numbers are actually taken, and they're verified through Seabridge. But from 1990 to 2000, 1.4 million mineable ounces of gold that could be mined were found for every million ounces that was actually was found. And these numbers are true. And I was part of a research group in 1990. And a world-class deposit in 1990 was designated as 5 million ounces of gold. And every year, 5 million ounces holes in the ground were closed for the major producers, and 5 new ones started up. So from 1990 to 2000, there are actually 84 plus 5 million ounce gold deposits discovered in the world in an active exploration period. From 2000 to 2009, that number has dropped dramatically, and the discovery ratio per year over that 10-year period was 2.5 deposits per year. And now we're down to 2016 to 1 or just slightly above 1. So it's a declining industry, but we're declining in terms of discovery, and we're declining in terms of finding world-class discoveries with size and scale. But what is it, and we're declining in geopolitical jurisdiction. We're losing countries where to explore to. And so these numbers are real, but I don't believe in peak gold, because prices change peak oil to lots of oil. So if the gold price goes up, then waste ounces become more. This is where we are right now in our Goldstrike project. We started off as a project. We purchased it for $7.2 million Canadian. We've de-risked that project, published a resource on it 3 months ago. And now we're in the dark green block, and where PEA should be released to the market in approximately 5 weeks' time. Then we go to the bright green dot, and that's when we'll upgrade the resource model, and we'll push this through to hopefully over the next year and a half, through to a production decision, with the deposit being modeled at this time at approximately 100,000 ounce annual gold producer. Capital structure, the market cap's about 70 million Canadian. The 5 major shareholders shown on the slide, Van Eck, Resource Capital Funds, 2 corporates, and the management aggregate 34% of the company, and the analyst coverage is shown. This is the management of the company. Mark O'Day is the chairman. I'm president and CEO, and Moira Smith is the VPX, who's responsible for all of these discoveries. And this is how we do it. We've bought 3 projects with a massive database of over 4,500 historical holes we didn't have to pay for. They were all run-of-mine heap leached operations. We know what the metallurgy is, so that risk box is ticked. We've evaluated the data, compiled it, and we've got 3 major projects on the go and all advancing at the same time, and Goldstrike is the core project. This is in Utah. And we purchased this for $7.2 million Canadian, and it took 17 months of due diligence and remapping before the first hole was drilled, and we're currently on hole number 525, I think, as of this morning. There's the geology. It's very, very simple. Gold comes up feeder faults and mineralizes the yellow rocks, and just below them, and Paleozoics and younger sedimentary rocks. It's a standard Carlin sedimentary type system, and it's covered by a cap rock, which is light green in the next slide. This is where the resource is. So within the dark black dashed lines, there's 65 million tons, mostly indicated at 0.5 grams or 0.54 grams. And we projected to have at this point, before seeing the PEA numbers, a strip ratio of less than 2 to 1. The strike length between these pits in this zone, this is just the first part that we've drilled, is 7 kilometers of strike with over 2 kilometer width. And anything between the two red lines is deemed to be prospective ground with intercepts, but we don't have them in the tight enough spacings that fits our model at a less than 2 to 1 strip. The resource model we've put out, there's your 65 million tons of 0.54, and I'll bring this into context in a second. We're also modeling at a 0.2 gram cutoff because we think that's going to bring an extra year of mine life based on the first PEA. So we're going to show 2 sensitivity analyses whenever that PEA comes out. Here's the metallurgy. It leaches like a dam. This thing recovered in 25 years ago, 80% of your leachable gold in less than 10 days. It's just the way these rocks are prepared to be mineralized and then subsequently oxidized. It's unique in that comparison. And this chart is really valuable. This is a comparison of run-of-mine operations and the other operations that are in the Great Basin. And this is showing Kinross, New Gold, Newmont, SSR Minings. And you can see that the average grade of a run-of-mine heap leach is low. It averages 0.5 grams when you take Long Canyon out of it. If you put Long Canyon in it, which is our predecessor company's discovery, which was unique, it was a 2 gram plus deposit, the average grade is 0.68 grams. But the metallurgy on these deposits, because they're big earth-moving operations, is 68.7% recovery, and ours is coming in around 80%. So we match it in terms of grade, but we're kicking it up in terms of recoveries, which goes to the bottom line, which is free cash flow. This is the final slide on Goldstrike before I put 2 minutes on Black Pine. Anything within those 2 red lines, we've got pierce points in them, and those pierce points confirm we have oxide gold at or near surface over a 22 square kilometer area. So that's the ultimate target size potential. Not all of that's going to carry. So that just gives you the potential on Goldstrike. Quickly on Black Pine, we purchased this for approximately $1 million at the request of our geologists in 2016. Subsequent to purchase, we found the historical database of over 1,800 drill holes. It's taken 7 months to model this property, and we actually think, we think we're looking at a 2 to 4 million ounce target as a run-of-mine heap leach above 0.6 grams. This is a great map because there's no geology on it. So this is just the depth of drill holes. Over 90% of the historical holes are 300 feet or less. We've drilled an angle hole below it, and below a historical grade, we hit 77 meters of 1.49 grams gold, all cyanide soluble. So the potential has doubled. We've calculated the deposit, and the deposit produced from 7 pits at an average grade range of 0.4 to 1.5 grams gold per ton. This is another way of showing it. This is mined material over unmined material, with the yellow dots being a 25-meter radius at 0.3 grams of oxide gold or greater. This is what it looks like on the unmined section, and that dotted in soil anomaly covers 4.5 square kilometers, where the soils on average grade between 0.1 and 1 gram gold per ton. So the soils are theoretically heap leachable, sitting on top of the undrilled portion of the deposit, which still has to be drilled to depth. And this is just a quick, I've got 24 seconds here. This is just the same way of looking some of the pits. You can see what was mined in a cross-section above, and you can see the gold they've left behind. What was mined, the gold left behind, and it still has to be drilled deeper. And I went backwards on that one. And this is Kinsley in Nevada, and we're putting a few holes in that now. But this is a high-grade 6-gram underground target that floats a clean con. And that's my time. No bell. I got the bell. Thanks.